Hey, and welcome to Triple Bottom Trading. I'm Thomas. Everyone who knows me calls me Thomas the Bear. You can call me whatever you want. Find me on Twitter at BTCPathoBear, where I post my macro outlooks, my trades, my trade ideas, and general ramblings. You can also find us at triplebottomtrading.com. Today, we're going to be presenting the buy the rumor, sell the news. We're going to try to understand what that means, how to trade it, and how to avoid getting crushed by it. So let's jump right in. So let's introduce buy the rumor, sell the news. Let's talk about a stock. We'll call it Stock X. Hell, we can call it Hertz. We can call it Chesapeake. We can call it GNUS, whatever the hot stock is right now. We're recording this the beginning of June, right around when the Robinhood traders have taken over Wall Street, and Davey Day Trader is all the hype and buzz going on right now. Markets don't seem to be rational, but nonetheless, we're going to use any of those stocks and talk about how people play the buy the rumor, sell the news event. So let's say that a stock's got its earnings coming up and there's plenty of news coverage. Everyone on Twitter is talking about it. You see it in the CNBC, you see Bloomberg talking, whatever. It's all over the place. And you're looking, wow, this is like the next hot thing. I really got to buy this thing before the earnings come out, because they're gonna beat earnings and it's just gonna crush it, and I'm gonna make so much money because it's so obvious. And each day leading up to the earnings, you keep kicking yourself because you didn't buy it, but the stock keeps going higher and higher, and it's just a few days away from the announcement, and you FOMO. You're like, I got to buy this thing now. It's going up, and it's not coming back down. It's gonna keep going. So the stock continues to rise, and you're feeling really good. You bought this thing, and you wake up extra early in the morning just to see the 9:30 a.m. open. And you see the thing gaps up and you're up 10%. And you're super excited. You're like, I'm not going to sell. This thing's going to double up by the time the earnings come out. And you wake up on earnings day, and earnings are, before the market opens, let's say. And the earnings come out and you see them and they beat expectations, just like the media said. And you're really excited for the opening bell. It opens up, and the stock's down. You're like, what the hell's going on here? I don't understand. This thing's rigged, or something's not right. And the stock sells off and continues selling back below where you bought it in. So the 10% gain that you had is now wiped out. And why did this happen? Well, we're just going to call buy the rumor, sell the news the BRSN just for short. It's basically an anticipated event or announcement that investors perceive to have an effect on the price of a security that eventually leads to an opposite reaction upon that announcement or event. So in the case of Stock X, or any of the names that we mentioned before, basically what happened was everybody was expecting this to happen, and instead of it going higher, instead the opposite happened and it dumped. And the reason for that, it's quite simple, and that's because financial markets are forward-looking. That means that all of this stuff was already priced into that stock. So it's always measuring its future performance. The people, the smart money, the big Wall Street guys, whoever it may be, they already anticipated the earnings beat, and everyone else who was piling into it did too. And what eventually happened was, once the news came out, everybody sold off because they dumped it on the people who, unfortunately, in this specific example, is the retail person who is you, who bought this stock because you thought it was going to double and it was going to the moon. And instead, all the smart money was like, okay, thanks for riding up with us. Now you get to buy our stock, and we're the ones that were making the money because we bought it they're the ones that actually ended up making the doubled their money. So a lack of edge over others with the same public information will lead you to falling victim to this BRSN, right? So if you're watching TV, you're on, CNBC. First of all, if you get an idea from CNBC, and it goes along with the narrative that they're pushing, you got to stop and evaluate what the exact opposite of what they're talking about is, because you need to understand both sides of the trade, the reason why it would work and the reasons why it wouldn't work. And especially if it's coming from CNBC or any of these major outlets, or most of your famous Twitter people or whoever it may be, you always have to do your own due diligence. You have to make sure that this idea jives with the way you see the narrative for that stock or that macro outlook or whatever it is falls in line with your own personal belief. If you are taking information that's publicly available, remember that there's someone else who's faster, that has more capital than you, that will be more likely to profit on this because they had access to it before you did, or they sniffed it out before you did. You always have to remember and ask yourself, why has this been made public? So let's talk about that example of StockX again. The earnings, we kind of already went over this, but just for the sake of maybe a specific example here, the earnings had already been baked into the price. The announcement simply confirmed the expectations, which led to a sell-off because there were no new buyers. The smart money was dumping onto the retail guys, the suckers. And rarely does an announcement dazzle and shock investors so much that it leads the stock to move up even higher. Now, there are times where this happens, where it's just like, holy crap, what a crazy beat. The stock just continues flying higher just because of the evaluation. The way that the stock is valued has to change and quickly makes that forward pricing correction. So over here, I've got a little chart of Sting, and I think I have this as, so this is a tanker stock. Sting is called Scorpio Tankers. This is actually, I'm going to use this as an example because it happened to me. I actually got sucked into this back in, I believe it was April, when basically Sting was coming out, and well, really what happened was we had that liquidity event where the stock market sold off, and then you had the oil market selling off. The USO went negative. People realized, wow, oil is so cheap. Nobody wants to use it because, well, first of all, we had the coronavirus lockdowns. People were in quarantine. Nobody was flying. Nobody was driving or traveling. So there was this glut of oil hanging around. There was all this excess, these excess barrels of oil. And the thought was, well, where are they going to be stored? And Scorpio Tankers is one of these companies that provides floating storage on a barge, basically. And everyone looked at the stock and they're like, well, this is where the oil is going to go. So right around when that started happening, the price starts going up. I ended up buying like right around here. So I was with the smart money. I actually bought calls. At one point up here, I was up 8x. And, I did not sell because I really bought the narrative. I thought that, people are going to continue to need to store their barrels of oil on these barges, and this company's just going to make a ton of money. And all of a sudden, leading up into the earnings, instead of, continuing to rise like the example before, it certainly did rise. But on its earnings day, this was actually in May, so on the day of the earnings, you can see down here, they beat expectations by about 66%. They even announced a dividend. They had a bunch of cash on hand. But everyone expected this company to do really, really well. And it just sold off hard because guess who was left holding the bag? It was retail. Now, I ended up getting out of the position. I didn't make 8x on it. It was very stupid. And this is just learn from my mistake kind of situation. When you make that much money on a stock, you've got to take profits. There's really no excuse for that. And that is your buy the rumor, sell the news. Like, everybody is susceptible to this kind of thing where you just get so attached to an idea that you got to pay yourself eventually. If you're clinging on to one of these events that's coming up and you're all in, you haven't taken any money or even your initial investment off the table, you really deserve to lose your money. And I sure deserve to lose the profits that I locked in for being greedy. So don't be like me. Lock in profits if you do have that edge. If you do, if you're trading technically or whatever it is that gives you your edge over Joe Schmo who's listening to, public information from whatever outlet it may be, you have to realize you got to get out before he gets out, before the smart money gets out, or you got to go through these motions in a way that you understand you're going to profit from. So that's the Scorpio tankers example. The next one here is this Moderna's coronavirus vaccine. I don't know if anybody paid attention to this, but basically what I have here is on May 18th, this company came out and said that they had very promising early results for their coronavirus vaccine in 8 healthy volunteers. Now, on that day of May 18th, the stock market went crazy to the upside. And that was all on news because, well, the vaccine's coming out. People are going to be okay. We're going to be able to go back to work. And things just start skyrocketing. So people are buying this stock. People are buying the stock market. And then, a couple of days, even the same day, actually, what happened was Moderna ended up selling 17.6 million shares to the public, which was priced at about $1.3 billion. So they just overnight, their stock went from $48 up to $76 in 12 days. So May 6th, it was $48, and May 18th, it was $76. And 2 of their top executives cashed out. And they made $29 billion market value, even though they had no marketable products. Their CFO and CMO, they sold 30 million shares. I mean, they were literally behind this buy the rumor, sell the news. Here's the worst part about this whole thing is on this third pane here to the right, is that some news came out a couple days later. It was like, this is actually a phase 1 trial. This was only a small population of patients, and it's not a really good metric to use to say that, hey, this is actually a vaccine that's going to save the world. And all of a sudden, the stock dumped. I mean, it was just like, those guys are going to end up in jail one day, is my belief. But anyway, you can see this chart here. Things are leading up to that event. They're supposed to be announcing their phase 1 event results on May 18th, and that's why the stock gap's up. It's continuing to move higher. And then once the news comes out that these guys are selling their stock, they're raising money, they're doing all kinds of shady stuff, the stock sells off. So another buy the rumor, and then once the news comes out, it's just sell the damn news. And look at this thing. It went from, this thing was trading at 87, 88 bucks, and 1, 2, 3, 4, 5, 6, 7 trading days later, it's cut in half at the lows. It's just, you always have to get out of the way of these events. And let me go over one. And if you're a crypto person, you're watching this, this will be for you. The crypto buy the rumor, sell the news events are very famous in the crypto space. This is the March 10th, 2017 example when the SEC rejected the Winklevoss Brothers ETF. They were working on this for years, and the market was really waiting for this. Everyone thought that, hey, if you create a Bitcoin ETF, that this is going to be the one thing that sends Bitcoin to the moon. Now, I remember sitting at my terminal the day that this happened, and what a wild ride it was. I mean, this is a 4-hour chart that I have up here. So each one of these candles is 4 hours. Leading up to the announcement, the price went from 1180 all the way up to 1380. You can see this green candle here. And then once the news comes out, boom, this thing sells off after they rejected it. So another buy the rumor, sell the news. This thing's going up. People are taking profits a little bit. No, it's going to go back up and make new highs. No, the announcement comes out and it's rejected. And then actually the price just continued to go lower after that rejection. So another example of buy the rumor, sell the news. Let's talk about a couple of the auctions back in, I believe this is 2013. No, this is 2014, sorry. So back in 2014, I remember this too. This was really exciting. When the U.S. Marshals had confiscated Ross Ulbricht, his Bitcoin from the Silk Road, they were auctioning those off. And Tim Draper was the one that ended up buying it. But this was an example of when people were speculating about how much did Tim Draper pay for his price of Bitcoin. And the market's oscillating around these areas. But once it's revealed what he paid and that it wasn't a significant level above the current price, people are like, okay, well, those coins are off the market now. There's no real reason to continue bidding this up. Another event, buy the rumor, sell the news. Then there's the halving events. These are very famous. So 2016, Bitcoin's second halving. You see the blow off into that event. July 9th marked the actual halving. I don't know what people are expecting. Maybe they're like, oh, overnight the scarcity of Bitcoin is going to rise. And once the reward is halved, that suddenly people will overnight realize that the price of Bitcoin should be double. And I think once people realize that it was just business as usual after the halving was done, that the price sold off. The price even went from 660 all the way down to about 465, 470 on the lows before recovering again. So these big events you have to be really, really aware of and how the price is going to behave. There's going to be a lot of volatility. There's a lot of money to be made if you're a swing trader, or you have positions to take, or a position trader, and you know where to take your positions off relative to the fundamentals. You can do very, very well if you don't get trapped. And that's really the end of the presentation. I think it's just important for you to understand the psychology behind this, is that you can easily get trapped in the idea that you're just going to get rich overnight, because this event is different. It's going to be the one that sends things in one direction forever. Well, I've got bad news for you. Markets do not go in one direction forever. As much as you may want them to do, if you have that position, they will always zig and zag and correct and do all kinds of wonky stuff. And that's specifically around these buy the rumor, sell the news events. So keep that in mind. Be aware of your own psychology. Be aware of the media and the motivations behind the stories, and try to understand how the market will behave leading up into an important event and how you'll play it. The most important thing you can do leading up into one of these events is to simply write down how you want to play the event in a detailed and specific way, where you're going to buy, where you're going to sell, and when specifically. Is it going to be before the news? Is it going to be just after the news? And just experiment with what works best for you. But if you have that written down prior to getting into the position, you're more likely to execute it and pay attention to that plan so you can avoid destruction like I did in my Scorpio tankers. So with that in mind, I hope this was helpful, and I hope you take this example and these examples to heart and profit from them eventually. Thank you very much for joining me. I hope you enjoyed. Until next time, bye-bye.